Good afternoon, ladies and gentlemen, and I hope you had a nice lunch. I am so pleased to introduce our next group. This is a very interesting, very relevant discussion. I was saying yesterday that, it's funny that we're at a Forex conference, and yet so many of these conversations have been about crypto and all kinds of alternative assets. So I'm so glad that we have this panel here to discuss many different kinds of asset classes. And of course, our moderator today is Ioannis Kantartzis, the partner and options strategist at Traders Magazine. We also have Joe Craven, the head of enterprise sales at TipRanks. You have some fans, Joe. Popular man. Akash Gharu, the CPO and COO of AllStars Trader. Peter Rosenstreich, yes, welcome, Akash, yes. Peter Rosenstreich, head of investment products at Swissquote Bank. We better give him a round of applause, yes. And last but not least, we have Andrew Lane, the CEO and founder of Acuity. Let's give a big round of applause to all our panelists. Thank you.
All right. Can I get some? All right, cool. So thank you very much, James, for joining this panel today. My name is Ioannis, and it's interesting day that Russia has got us with some interesting news, some volatility in the markets, and what better time to discuss about how companies can help with new alternative assets, strategies, and quite an important session I think we've got today, right? So we're gonna be kicking off with Peter, if you don't mind, and I would like to ask, which asset classes do you think are becoming more popular nowadays? And what can brokers, exchanges, and FSPs can do to take advantage of investment trends in 2022?
Sorry about that. I only got a small part of the question, but I'll start the conversation and then we can go from
Go ahead.
Where I see things. I think the last year or two has been a very interesting time for investors in experimenting with all sorts of new ways to capture volatility, to look at risk, to find non-correlated, non-directional strategies. And in that search, obviously, they've gone to a variety of different asset classes, well outside of the normal spectrum. And I'm not just referring to, institutional hedge funds, but I'm talking about, the retail class that spent the last, 4 or 5 years going directional long U.S. equities, looking for other alternatives. And obviously, it's expanded from what we hear about in terms of the cryptos to NFTs, but also non-liquid assets, things like lumber, things about like crowdsourcing, non-directional strategies, things like barrier reverse convertibles, yield enhancement strategies, accumulators. It's less about the asset class, which is a very old-fashioned way of describing an investment concept, to how can they remove themselves from just taking the pure directional risk and finding new approaches. That's what's exciting people. So if you can take a wrapper and say, okay, let's do a barrier reverse convertible on Google and Facebook, that's much more exciting to the retail and small institutions than it is, say, just go in a directional long equities. So it's less about the different assets, but actually the packaging and wrapping them up and the additional exposure that they can get. That's really sort of exciting. And that search is leading to all sorts of weird places. Obviously, I think NFTs are probably the most sort of archaic and strange, but it's also capturing sort of the normal asset classes in wrappers that that they normally wouldn't have access to.
Right. Thank you very much, Joe. What do you think the two geopolitical, socio-democratic or economic risks, right? Do you think investors and traders should be looking out for this year? It's quite actually,
It's a very timely question. If you would have asked me this question a month ago, I would have said to you, watch out on Russia and watch out on inflation. But we've got inflation and we've got Russia invading in the Ukraine. So I think that those two factors are obviously in the price at the moment across the curve and across markets. You're certainly seeing a spike in volatility. Although you're not seeing that spike in volatility in the FX markets significantly, you've seen it in the bond markets volatility. You've seen it in the equity markets volatility, in the commodity markets volatility. But if you're looking at vol across FX, for example, you're looking at a euro dollar that's trading around, or was trading around 9 one-year vol, that typically trades around 10. And if you're looking at the 5 delta puts, for example, which would have spiked overnight because you had a % move, which really isn't very much in FX, volatility isn't in FX. Now, that's just a factor of what's going on. So it's a bit of a interesting fact that for brokers out there that are looking at having their clients trade, FX perhaps isn't the most interesting point of view at the moment. Now, geopolitically, obviously Putin flexing his muscles and moving into Ukraine, and the poor Ukrainian people, and I was just talking to Andrew before, and he's got a whole team of programmers there that are literally driving to the border with Poland. I mean, it's terribly scary. So this is obviously something that we're living with, and we're at the very beginning of. So this is geopolitical. Now, what the economic headwinds entail with this is that we're facing a global inflationary pressure with problematic supply chains. And we've seen significantly tight labor markets. And now with this, will the consumer put their hand in their pocket and be encouraged to go out? So perhaps some of the inflationary pressures get taken away. And so perhaps the pricing that's in the bond curve at the moment for Fed increases is actually incorrect. And perhaps that is a risk that economically speaking, we start to see a slowdown, and that this whole geopolitical mess in Russia, if it spills further globally, turns out to be a deflationary effect. So that's that. In terms of other risks, I think that something that is significantly underpriced, certainly in the alternative asset space, is regulation. Now, regulation comes to all markets, whether people like it or not. The last market that's effectively been the cowboys market was the FX market, and that's being regulated. You saw a few years ago all these LIBOR scandals. So now you have regulation in the last market of FX, but it's no longer the last market because we have crypto and we have NFTs. And so the regulators globally are working very, very hard to figure out how to regulate this market. So this is a major risk. It's a major risk for brokers, it's a major risk for any liquidity provider, and it's a major liquidity risk for retail investors who have got their money and who are trading it. Now, it's not only an issue with regulation, another risk is liquidity, because when the regulation hits, what is the liquidity going to be like when people want to get out of positions, when they want to turn that into cash? So if you're looking at future volatility and future concerns, I'd have to say everyone knows what's going on at the moment. Perhaps we have a deflationary spiral coming. Don't know. Regulation certainly on its way, and liquidity. So that's
quite a gloomy picture you're painting there, right? But you know, that's reality, picture. Right? Yeah. All right. So Akash, you come from a slightly different background today in terms of like new CFDs on sports and other personalities, if I think. So what's your take on traditional assets? And, you know, are really people getting bored of FX trading or similar dominating forces for the past 15 years on MT4 and 5 and all that?
Yeah, hi. Thanks, Ioannis. Look, I probably want to bring it back. I mean, that was a very grown-up picture played.
Let's hold it.
There's quite a grown-up sort of topic that you had to touch upon there. But if I could bring it back certainly to kind of the scope of this room. If we're talking about most of the brokers that are at this conference, they're offering OTC products. And if we're then now talking about alternative assets around the OTC world, well, they haven't been able to dabble with the kind of exotic, they haven't really been able to dabble with the kind of exotic products that you just described there, Peter, right? That's very much in the kind of the back room of the institutions, the hedge funds there. So if you talk about the OTC world, the products that are on offer haven't really changed, at least for a decade, right? There's probably been a small amount of innovation when crypto was introduced. There's some innovation around social trading, copy trading, and actually, I think Robinhood came along and showed us how to fractionalize the stock world and make that accessible. But other than that, nothing really has happened in the OTC derivatives world to change the complexion of the assets that are on offer. And so one of the real things that we're trying to achieve at AllStars Trader is to go back and find relevance with the client, the end client, something that they can understand, something that means something for them, a market that's accessible. And actually, I think that if we started to tip the thinking there, we should all be thinking about what is it that the client wants? How do we get engagement with the client? How do we convert them? How do we keep them engaged with the market and move them forward? And make their experience with trading something that's actually a bit more wholesome than finding that they're in a losing position or always on FX because it's too complicated to understand. So that's where we're coming from in terms of the angle of which we want to help brokers introduce entirely new asset classes. Now, where we've picked that on, the area that we've come, we're deploying products and researching them, is in the area of human success. And our first foray into this is around the sports products, so sports CFDs around football and cricket at the moment. What we're finding is that immediately engages with the end client. And so it's something that there's a long way to go here, but we're certainly finding that it piques an interest. It creates a new way of engaging with clients that have been long-standing or clients that are starting to go down the abandonment route. And we all know what that looks like. I mean, that's the constant fight that everyone's got in this conference. So I'd love to pick up on this topic as long, throughout the conversations that we're going to have. But hopefully we're talking about something new and exciting here.
Cool. So, Andrew, how is the advent of artificial intelligence and other trading technologies, you think, influencing the creation of new type of assets?
Hi, and thank you. So, for those who don't know me, I come from a career previously in media. I worked for the Wall Street Journal and Dow Jones, and now I work in the field of data science with text. So my outlook on a lot of this is how can we use artificial intelligence from a point of view of text. And we have two parts of my business. One focuses on hedge funds and one focuses on this market we're in now. And a lot of work we see in the world of hedge funds, I see rolling over into this. And that's how do we use text to create new asset classes or new assets to trade. And you might think that's a bit strange. But the way that we view the world is how can we create or understand the relationships between companies or assets through text. I remember many years ago talking to a trader, probably about 20 years ago, teaching me about arbitrage strategies, how when SocGen went up, BNP would follow very, very quickly afterwards. Nowadays, we can work out the relationship when we look at something like BNP Paribas and look at the relationship in text. How many articles are mentioned between BNP and HSBC or Santander or whatever it may be? And is that a positive or negative relationship? So we can do an arbitrage relationship based on text. We can also look at, and when we talk about a different asset class, in the sense of if we look at an ETF is a group of assets we put together that maybe we want to trade gold. And so we take a bunch of gold stocks. But actually, those are only going to be mining stocks that are focused on gold. But if we look at companies associated with gold in the text, we can probably get a better ETF and understand how to trade gold by looking at journalists writing on it. And that could be a basket of stocks that only appears for, say, an hour, or a day or a month or a year, but all based on the relationship in text. And we can do that across other areas as well. So we can look at, say, for example, SEC filings or patent reports and understand how companies are developing themselves. And whilst, say, for example, Apple might fit within the consumer electronics sector, we can start creating our own sectors and understand these sectors based on where Apple's going to be investing in the future, all based on text. So, and that's not just focused on equity markets. There's no reason why we can't do that in FX and also in commodities. We're developing some really, really powerful tools using natural language processing to understand economies at the moment and what is pushing economies up. So we rely on inflation, for example, inflation reports that come out monthly. But what is inflation hour to hour? And we can learn that through text. I'll give you an example of a report, a data point that we don't use ourselves, but other people are using, is that we can look at how many people are buying from Amazon. The more people that buy from Amazon on a second-by-second basis, then the more Apple shares are going to go up. But also Amazon shares are going to go up. But Amazon is also a conduit for the American economy. The more people are spending on Amazon, the more the economy, and the more inflation, what we were discussing earlier. So I guess I've gone away from the original subject, but to understand and to relate different assets together can create a new asset class in itself, like ETFs were created, by just understanding the relationship through text.
It's nice that you mentioned that, like alternative assets and all this information. A question for all of you, Jen, starting with Peter again. So it's alternative assets against traditional. What do you think from now to 10 years' time we actually gonna see?
So I would be sort of very conservative about saying traditional versus alternative, and what assets are going to become the more sort of mainstream. I think what is changing now is people's approach to risk and their trading strategies to capture the expectations. I think that's really what's changing now. To sit, the retail trader has become extremely educated, and at the same time, they've gone through some significant volatility cycles. And they've gotten to understanding that if they buy, a normal equity, that they're going to be riding ups and downs. And many of them have come to the conclusion that potentially this roller coaster doesn't have to be, the only ride in town, that there's ways of looking at risk and ways of capturing, an expected return that doesn't mean you only have to go long stocks. So if you're, if you like, chips, then maybe, buying semiconductors is not the only way to play. And what is changing now, and I think where events like this expo becomes very interesting, is how do providers create products that allow people to manifest their new vision and new investment opportunity. That's really what's changing. It's how they approach the market to capture an expected return. So, if it's supply chain issue, if it's inflation, the traditional buy a stock, buy an FX, buy a commodity, and wait, is no longer purely the game in town. And I think that's what's really evolving. And, we work very heavily in structured products because within the concept of a pre-made wrapper, we can build all sorts of incredible strategies with a diverse number of assets underneath. So we can combine commodities, we can combine crypto, we can combine private equity, we can put optionality in it. all to give the client exactly what type of risk that they're looking for. And I think that's the evolution. You know, the search for new assets is part of the story, but how they actually enter that trade is the big story, I believe.
So you're actually talking more about diversification, more educated clients, like a multi-asset platform that give you all solutions you're looking for.
Yeah, securitization, you know, wrapping, you know, structured products, but how they approach the market. And the evolution, again, is, in my mind, is how do you take these products? We at Swissquote started an application called themes trading, where we take thematic investment portfolios. We put them in a publicly traded wrapper on the Swiss exchange. And we have everything from cannabis to crypto to buy right on gold to smart beta. In order for our clients to say, listen, I want something to pay me an income that's value-based, that's low vol. What can you provide? You know, and we give them a solution that doesn't just involve buying an equity. So that's really what I'm talking about, and I think that's the evolution that's coming forward.
Akash, your take on that? Sorry, Joe, you wanted to say something.
I was just going to say that I actually disagree with what Peter says. Sorry.
Well, it's democracy officially.
I actually think that we're facing the most undereducated retail market that we've ever seen, and that participation among the average Joe and Jane in the markets is the highest it's ever been forever. And that you're talking about structured products. I spent 25 years in investment banking and I still don't understand it as structured products. There's waterfall, windfall, wedding cakes and all sorts of structured products. And the average Joe and Jane who are buying and selling haven't got a clue. And so whether they go long and then get stopped out on an equity, okay, maybe they can understand some of that. But I see the future in structured products and things that you're offering. But before you get that, you need to educate the crowd. You have to educate the crowd.
Yeah, I would jump in there and say that the number one trend in U.S. financial markets is a rotation from funds into publicly traded ETFs and ETF-like products. And that is an undeniable aspect. People are getting more sophisticated and looking for products that are pre-made, pre-wrapped. And the difference between that and a structured product. Now, what I find very interesting is you say structured products, and I suspect that you're thinking about, you know, a barrier reverse convertible with some type of optionality, but you understand that within the world, or the generally accepted definition of structured products, you have Delta One participation vehicles, which are primarily what ETFs are. So if you're telling me that ETFs are not a structured product trend, then I would say you've got to get some data together.
No, I'm just saying that they don't. I'm saying that they don't understand these things, and they're the fundamental underlying components of what you're packaging together. But besides that, what I'm actually saying is this: in terms of the future, and in terms of the way in which Ioannis asked the question of the next 10 years of what's happening with products. Of course, there's going to be a shift. There's always a shift. There's a shift towards crypto being acceptable for institutions. And that's a very, very small amount of institutions that are putting their feelers out to understand it. It's very popular amongst the retail trader, and the retail traders trading the volatility on it. But will it be widely accepted over a 10-year horizon by the massive institutional players? Okay, that's interesting. The metaverse, NFTs, it's going to take a long time until these become mainstream, until they're fully regulated and offered at your retail branch of NatWest, for example, in the UK, or your Bank Hapolim in Israel, before these things actually become a mum and dad kind of product. And that really is the progression of a equity or a bond or a structured EFT or whatever is, whether or not the uptake will go to main retail outlets, the big banks. And what we do at TipRanks is we work on the educational aspect and the engagement aspect, allowing the retail trader to better understand data-driven aspects of the stock market. And we've revolutionized the way in which the average mum and dad can consume information. consume really helpful information quickly and easily to allow them to make smarter data-driven decisions. Now, when that's available across all the curve, not just in the stock market, but in crypto, then you're going to get a bigger uptake.
Cool. Well, thank you very much, Joe. Akash,
Yeah.
before you just said your opinion, like you're coming from a product which actually is revolutionizing a little bit the way people. I mean, I can trade a CFD on Julio Iglesias anytime soon, or maybe Ronaldo. Yeah. So just tell us a little bit about it, because you are now creating something that we haven't seen in many years. But I don't know how successful it can be, or you think it can be. But you know, that's an alternative asset that has come into play quite recently.
Look, thank you, Ioannis. Look, we think we're answering a question. This is definitely, and that's the underlying motivation behind our product, I guess. But look, we're talking about 10 years, are we, right? 10 years is actually plenty of time for digital innovation, plenty of time. If you see what we've done, covered in the last 10 or 15 years, I think this real question is about what markets the general or the average trader will get access to over the next 10 years. And that will be remarkably different to what we currently see. We're sitting here talking about structured products or stock markets. Now, these markets, the market landscape will change. We'll be trading different products and different concepts in the next 10 years. Metaverse and digitization, crypto assets are definitely going to help accelerate that. But actually, when it comes down to it, if we have a mind shift as we go along, we go back to what is it that people naturally want to be participating in? Not what they have on offer. What do they want to be participating in? They trust themselves, and they trust that they have an asset of knowledge about certain things. Those are the things we should be tapping into. Now I was talking about sports, but actually this covers other grounds as well. In terms of sports, though, people have feelings and opinions. People have a view of the market. What we have failed to do so far is create that market for that participant. And what we'll see over the next 10 years is markets that emerge to answer that question. What is it that people want to participate in?
Okay, all right. Andrew, so we've got rise of alternative assets, we've got plenty of news around, etc. So what do you think this means for the online trading world? And whether people are still looking for educating themselves or, show up with an information left and right? So what is the impact that you think this rise of alternative assets will have on the online trading world?
Sorry, what will...
I was just saying, we've seen, alternative assets on the rise, be it crypto NFT or CFD on famous players and everything. So what is really the impact on the online trading world? Will people, embracing this and wanting more education, on that? Or is it just the old way, I'll trade shares, heads with maybe an alternative tool, and that's pretty much it because that's not for me?
Well, I think, first of all, about shares, getting back to earlier comments about the war and the inflation and all these kind of things, I believe as interest rates rise, we will see the drop-off. Shares will peter out. It's just an opinion. And as shares don't go up, users will start saying, well, okay, I'm not going to invest in shares anymore. But as an industry, we've seen over the years, we had binary options, we've had high leverage FX. Yeah. The industry likes to bring new ideas. And I also believe crypto being regulated. Personally, I always believe that crypto can only go so far before a central bank will say, that's enough. It's getting too tricky for us to manage, and we're going to stop it. So this industry innovates massively, such as the AllStars with the football theme. And I would see more coming through in that area. I have no idea what that will be, but I am sure that there is a desire for people out there to trade new and fun things, especially things they can understand, which is why share trading is really, really good. Is people can understand Apple because they're buying apples. People can understand an ETF because it's called gold. Right, I'm going to invest in that. An ETF's really easier. Football stars even easier. Binary options, I never understood myself, but apparently they were quite easy to understand. So there will be more products to come. And I'm sure people around here will be the leaders in bringing those products to come. And then the regulators will find it even more hard. They'll be needing to regulate these again. And it's a circle that goes round and round again.
Right, good. So just a question for all of you gents before we start wrapping up is about education, really. So everyone really offers a state-of-the-art education, also quite a few companies think, but still the average investor is treating buying shares as a lottery ticket where it goes up, we win, goes down, we lose, a binary result. And at the end of the day, they just don't realize that they're buying a share of a company which is based on the results, etc. Fundamentally, technically, it doesn't matter, or the horizon, the time horizon. But do you think education, or do you think your companies actually are based a lot of education? I think people are just one step ahead this time with all this advent of crypto and more information available? Or is still like someone addressing the investment issue, like, okay, I've got a few money to spare, and that looks like a good opportunity, instead of employing all these tools that you gents talk about in your seminars? Maybe Peter?
Where the question is, I would go back to our discussion. I see Mr. Higgins on the front row, a gentleman I've been seeing here for, oh my God, maybe 20 years at this point.
Maybe more.
And I'm thinking of the millions of dollars that the financial firms have pumped in on from an educational standpoint. And I do believe that the average retail investor, whether it's FX or equities, is significantly more educated than they were, 10 years ago. And I'm not just saying because they built up experience, but a new retail equity trader is, I believe, more sophisticated than they were in any other period in financial history. And when I look back at some of the wars that were being fought in the financial markets around the meme stocks, I realize really how sophisticated these retail markets have become. When you have, Reddit crowds taking to task hedge funds of the highest quality and winning, I can't go back and say, well, these markets are unsophisticated. They don't know what they're doing. They clearly know what they're doing, and they're doing it well. So it's part of our job to educate. But I think that we are doing, maybe not individually very well, but as a group, I think we've done a very good job in the last 20 years educating the markets on financial products.
Is it really, Joe, like that? I mean, the retail clients have taken a quantum leap in understanding risk management, money management, diversification, going short, different products. A lot of things that I personally think they still struggle with, although, yes, they've taken great steps, but at very slow pace.
I think that they've really nailed momentum trading. And I think that is a good start. I think that they're also pretty good at technical trading. I think that we have some very smart educators in the technical analysis field that are making themselves available to the retail investor, and that helps them to get educated.
But is it what it takes, just technical analysis?
And I think that as well, I mean, again, taking it to a personal aspect, obviously I work for TipRanks and I lead their enterprise sales. We've been around since 2012, and we've revolutionized the way in which the retail investor can view and simplified data, simplified grade A investment data, so that they can look at a simple chart and they can see what the analysts are saying. They can see the consensus. They can see the forecasts. They can look at what the hedge funds are doing. They can look at what the insiders are doing. But more than that, they can actually follow the best performing ones of these. We have a monthly users of around about 4 million individual users in our web-based platform, our B2C platform, every month. So Peter's right, there has definitely been an increase in education. Is the level of education where it needs to be? No, nowhere near. We're partnered with some of the biggest banks and brokers in the world: TD Ameritrade, E-Trade, eToro. Yeah. We work with Interactive Brokers, with Santander, with TD, with CIBC. Yeah, we work with all the biggest brokers and banks in the world. We're featured on the NASDAQ, the TMX, the St. Petersburg Stock Exchange. So we're revolutionizing the way in which the retail trader via the B2B2C, via the brokers, the big brokers out there, and a lot of the smaller brokers who are disrupting the market, are actually consuming top-level research so that they can just look at something very visual, very graphical, and they can get a sentiment gauge, like exactly what Peter's doing as well, in terms of sentiment. They're looking at something that is going to affect the market, whether it's a new sentiment through complex NLP that gives them the ability to look at something immediately and say, yes, there's 25 articles, each one of these articles are bullish. The share price is going up, the correlation is very high. So for sure, I mean, I also think, coming back to the previous point, there's so much activity in sports. People love sports. They want to trade sports. So what you have, another wonderful product here, but they need education on it too.
Now that you say that, yeah, Akash, so you've got, you
May I
seem
come
like
in?
you're having like a short-term, quite volatile product, potentially volatile product, on a CFD form, which you would need to educate traders to like, absorb this information, right?
I'll definitely answer that question, Ioannis. But
Please
just
do.
let's talk about education anyway, right? Because we're all trying to follow a moving target here, right? So, say 15 years ago, the iPhone was invented. It didn't come with an instruction manual, right? Everything your engagement with the iPhone from the very first minute you unwrap it has to be intuitive, okay? So we learned at that point that you have to take education a different stance on it, right? The thing that you're offering has to fit around the person that's going to use it, okay? So let's see if we take that for a minute. And then we talk about now, we're all attention short and becoming increasingly so, okay? So the way to reach people is in a very short space of time and give them a highly impactful piece of information. And this is why TikTok is emerging as actually a very useful educational tool now, okay? So now there's some very complex concepts that have to be passed around trading. Risk management, margin management, take profit, whatever, right? So those all have to be broken down, and we have to find a way of engaging with that person and getting that knowledge across. Now, that means looking at the tool sets we provide, making sure the apps allow this, make complex products look simple, right, accessible, give engagement to across communities about what's going on and what's the general consensus and the sentiment, and using natural language processing, right, to actually crunch down large, complex pieces of information and make them accessible. So education will have to move in the way it applies itself to people. Now, going back to sports trading, the education is there with people. They sit around and they talk about their opinions and what matters. Now, you're absolutely right, Ioannis. The first wrapper we've provided around sports markets here is CFDs. So CFDs aren't simple for everyone to understand. So the educational piece that we have to achieve is to let people know about margin management and risk management for themselves, so that we're not putting them in a disadvantaged position. So we give them an opportunity and a chance to make a success of what they know. Now, we've had to do that through those mechanisms we just talked about, right? Short, sharp pieces of information, and make sure they're getting it. And I'm sure that most of the other brokers are thinking about this as well at the moment.
Okay. Now, we've got only 1 minute to go. Just a quick note on this information, if someone wants to comment on that, and then we wrap up. Now, information used to be very scarce, like 60 years ago, and then people who had it were actually ahead of the market sometimes. Now, it's very abundant, and people don't even know what to do with it, and they just can't decipher what it is in that. So how do you people get around this problem, like too many emails, too much information, webinars left and right? I mean, just leave me alone to trade. Is it like that?
Yeah, that's where I started off my company from many years ago, is the fact there is so much information. First of all, you had the years of where institutional traders had access to news that others didn't, through their Bloomberg, their Reuters terminals. And then you had the deluge of social media and news on the internet. And the simple process is you use algorithms, NLP algorithms, to cut through all the noise and create a simple understanding. And although we talk about how we're delivering tools, many of us, to users that are very advanced, you've also got to remember that the hedge funds out there working on their own and working with companies such as ourselves are working on even more advanced technology. So whilst our technology is super advanced and it can cut through all the noise that's on the internet, there are some really interesting technologies coming out using deep learning and other things that one day we'll see in the retail sphere as well. And the same will always apply. Institutions or institutional investors at hedge funds will always have that tiny step ahead of us, even if we like to think where we can trade AMC stocks on the same level.
Great. Well, gentlemen, we'll have to wrap it up here. It's been very interesting. Thank you very much for attending and watching, and thank you all for your answers. Very insightful.
Thank you, Ioannis. Thank
you
you.
very much.